Good evening, friends. Today is 28th of February 2021, and I'm making this video for 1st of March 2021. As you can see, I have not opened Nifty or Bank Nifty charts. Most of you would know that we had a fairly decent correction the last couple of days. So the normal thing for anyone to see is the US bond yields have come, and due to which markets have crashed. And so people have to understand the difference between correction and crashes. Now, is it further going down, or that's how the panic looks like, or whether we are hoping for some kind of recovery tomorrow is a big question. And I think this is where I wanted to take this opportunity to make a video as to what has changed, what has not, and what would be my view on the markets for tomorrow and the coming week. So first of all, you have to understand that big players create their positions. They don't create an intraday position to for a buy or a sell call. Yes, they do make intraday positions, but they have a longer view. So I want to just take this opportunity to make you understand. So last year when there was a crash in Corona, there were indications early enough. Many people did not see it, and many people did see it. So now we are not going to talk about it, who caught it and who did not, and things like that. There is no need for that. What you can see is you have to see early indications of a reversal or a pullback or whatever where the markets are heading. So coming back to my point, big players or the institutions do not make positions based on Monday's view or Tuesday's view. Yes, they do make they do take out money and they push in money based on a longer term perspective. For example, if they want to put money on the Indian economy, they are not going to say one day, okay, we are going to put money on the Indian economy today and tomorrow we are going to take it out. That's not how it works. They do it on a longer horizon. So this strong bull rally actually started sometime in November, before the US elections. So that's where it started, and there were early indications that they were blindly buying holdings of equity, and that's where the buying started. So as you could see, Bank Nifty rallied from around 23,000 to 24,000 odd levels to where it is now at around 34,000 now. More than 34,800 or 35,000 thereabouts. Of course, there were a lot of hurdles in between, but the rally from 24,000 to 29 to 30,000 was pretty quick. It was very brisk rally, and people who were blindly buying calls also made money. So my sense, what I'm trying to put it across is, big players usually have a longer term horizon. At that times, if you would have seen the values in stocks, the buying value of FIIs and FII figures, and how they were buying value stocks. Now you could ask this question: how would they be making money if they are buying stocks at high? Of course, would have a contraposition on put side. They would be selling puts, and of course, in between, they would also be bringing down Bank Nifty down by selling futures, because they are not going to lose anything, because they are actually holding a good amount of value in cash. So that's how it worked, and the rally started sometime in November, and now we are at the end of February. Now, what next? Yes, now before I go further, I have to give you two two signs. Now, this could mean either way, or this could be just a trap. Now, as you could see, I have opened chart for USD INR, which was pretty much down. It was trading well below 73 for a very long time, and right from the past few months. On Friday and Thursday and Friday, as you could see here, there has been a very good volume buying and it's a sharp recovery in dollar index, dollar USD INR pair. What this means, what this could mean is the FIIs or the big players, the institutions are taking out money from the market. Now again, this this is just an indication. It doesn't necessarily mean the same because the money has to come from the money market. So this is an early indication of here whether it is a strong buying or not. If you are looking for a panic, I do not see any panic as such, whether it is corona or anything else. There doesn't look to be anything as such. Yes, bond yields, the news about that is something fairly considerate, and you will have to take it whether that is really a news driven. So if it is news driven, it will cool off in the next couple of days, and then we will see a recovery. But two things. One is the USD INR has a sharp volume buying from downward. Yeah, it was fairly down a couple of days ago, and then suddenly it has picked up in the last couple of days. And India VIX is trading at around 20. India VIX. We do not trade India VIX. India VIX is about 28, which is also not a good sign. Again, now I'm going to break it up for you. India VIX is nothing but is a volatility signal. It does not indicate a real panic as such. Yes, it just indicates that buyers and sellers are on both sides. Many people are on the buy sides, many people on the sell side. It doesn't necessarily mean the markets are going to go down. Has been some kind of fear in the market. It could be upside fear or it could be downside fear also. That's one part. Now, USD INR, this is not a very good signal because this actually, if we see another green candle, big volume green candle tomorrow or Monday, this by the end, I mean daily candles. So that means a very good signal tomorrow also. It will create a white soldier, three white soldiers kind of pattern. And on a downtrend, it's known as a very sharp reversal, which also means what it indicates to us is the big institutions are slowly taking out their money. Now, this is just an indication, not necessity. Now, one other important parameter is we have just finished the monthly series closing. The monthly series closing means the last trading day of any month. Usually, whichever side it goes, the first day, if there is a follow-up candle, that means tomorrow, if this follows up with the same negative side, then and US dollar and INR is also having a same kind of recovery, then it fairly means that this downfall is going to continue because it's an early indication that FIIs or institutions are basically taking out their money and putting in US dollars. That means the equity market is going to affect for the time being. So it will be an important day. So to conclude, if you ask me my opinion, yes, tomorrow would be an important day for starters, for beginners. I would say stay away from both index. Just watch if there is a recovery coming, and the recovery has to be sharp. First trading day of the month, big players do not make intraday positions to trap retailers. They do have a long-term view on the market, and it could be positive or negative. So This small news is not a trigger. It could just be a a news to trigger for a downside or anything else. But we'll have to wait and watch. So my sense is Monday, the first trading day of the month, stay away. Just watch how where the markets are heading or closing. If there is a follow-up red candle on both the indices, Nifty and Bank Nifty, then I think we are going further down. Nifty towards 14,000 and below, and Bank Nifty towards 33,000 and possibly below that. So first day of the month is very crucial, is my sense, and we will have to see, and also keep a close watch on USD INR, whether it is going down below 73 or is going above 74 levels. If it is going above 74 levels, then that's definitely not a good sign. So we'll have to come and wait and watch for tomorrow and see how it goes. So that would be my view for March first week and March series. So trade well, trade safe, and please consult your financial advisor before taking any trade decisions on my views. So my views are completely expressed based on personal views, and I do not provide any kind of recommendation. Thank you, and I will see you again. Thank you.